Titan, it is the biggest loser on the Nifty today. The stock has seen its biggest intraday fall since November 9, 2016. That's the day post demonetization. Today's fall comes on the back of its weak first quarter update, but it saw a slowdown. Agam Vakil is here to put things into perspective.
Well, it's the jewelry sector which contributes to 83% of Titan's revenues is in focus, and that's where we're looking at muted growth according to the management in the quarterly update of 13%. This comes on the back of 23% growth in the previous financial year, and brokerages indicate towards the management that this year at least the outlook for the jewelry sector is a growth around 22%, which means that this leaves Titan with a lot to catch up with in the remaining remaining three quarters. That said, it has done reasonably well in Akshaya Tritiya, and its collections have done decently well as well. That's moving on to your watches and eyewear segment. This is where you've seen a little bit of an increase in momentum, considering the kind of expectations that we are working with. About 19% growth seen in some of these segments, and that of course is a positive considering we are looking at 15% growth. Of course, it is the e-commerce channel which is doing very well for them, as well as smart watches, and that has provided growth. But considering the majority of the revenues for Titan comes from jewelry segment, and that's looking weak, that's the reason why we're looking at weakness in the company today.
Okay, that is on Titan, but Agam, TCS will kick off the IT earnings later on today. What are the markets pricing in?
Sure. So perhaps the best in terms of expectations among its peers, certainly in the top five, we are expecting a 2.6% growth in dollar terms, a 1.2% growth in rupee terms. Margins are expected to come off to around 24%, and we're likely to see profits consequently decline as well by as much 3.4%. Now, we are looking at TCS building up substantially when it comes to its digital services business, which grew nearly 30 to 40% last year, and this time it is going to be that very business which is going to provide the growth. However, we must also remember that there's been a little bit of volatility in the capital markets, and that there are some challenges there which may actually impact adversely the banking and financial sector vertical. But as far as your operating margins are concerned, that's where the big concern is, considering we're looking at high wage hikes as well as visa costs, and we all know that subcontractor costs remain elevated, so that is also something that will work against margins at least in this quarter. Keeping an eye on some of those aspects, as well as the new trends as far as digital services is concerned.